Keith. Okay.
Hello. Hi.
Hi.
How are you?
Good, good. Just making sure that everything worked. And I'm just getting off of a call. So
Okay. No worries.
one minute. Bob,
Yeah, that's exciting.
it is. It's really exciting. I'm gonna call you back. I'm actually on a Zoom call with
Okay, yeah.
with
Take care. Well, see you.
with Kenya at the moment.
All right, see you at 12.
Bye bye. So how are you, Sylvia?
I'm very good, thank you.
Excellent.
I was really looking forward to this conversation. Sorry, last week I was traveling back from Seychelles, so I wasn't able to sit down and get down to the details, but I'm glad we're here now.
No, this actually works better for me as well. So
Okay.
not a problem.
All
Excellent.
right. So let me pull out your trading bio because I need to read that out.
Okay.
Oh yeah, you had
Actually,
sent it as an
I'm
email.
I'm gonna get a glass of water and I'll be right back.
Okay.
Okay. I thought we were gonna start in 8 minutes. I was just the
Yeah.
link was I had there were two links and I want the first one didn't work. The
Mm-hmm.
original one in the email did. So that's
Yeah.
why I was on a little bit early. But
All right.
I'll be okay.
Okay, cool. Hi Seth. Hello, Seth.
Yeah.
Hey, I'm glad you've joined. I don't know if guys will be streaming in because I don't see people joining in. But if there will be any questions, you can help me with the Q&A.
Okay, no.
Yeah. So meanwhile, guys, let me be reading out Keith's bio. So today's podcast, we have Keith Schneider. Keith has over 40 years of experience in financial markets. He started out in 1977 as an independent floor trader and a member of all the major New York futures exchanges. In the early 1980s, he started Market Vision Corp, a company specializing in supply state-of-the-art workstations to major financial institutions and pioneering the use of color, windowing, and superior graphics. In 1994, Keith began managing money for Millennium Partners, a New York-based hedge fund. From his time on the trading floor to moving upstairs into the hedge fund world, he was able to witness firsthand the changing nature of financial markets and the trends towards increased computer automation and globalization. With Keith's unique perspective and trading style, Keith went on to found MarketGauge.com, a provider of financial information to thousands of individual investors and traders, as well as large financial institutions and publications such as Barron's, Fidelity, Thomson Reuters, and Bank of America. After visiting several times and being impressed with the art, culture, and beautiful panoramic landscapes, in 2004, Keith and his wife Mish moved from New York to Santa Fe, New Mexico. Keith is the founder, co-founder, and CEO of MarketGauge.com. For nearly 20 years, he's been developing and improving their trading products, services, strategies, and systems, while also serving as a trading mentor for Market Gauge customers. Keith also produces weekly editorial content with market analysis called Market Outlook. Keith is a FINRA Series 65 registered investment advisor representative IAR and serves as an investment advisor and CEO of Market Gauge. Asset management, Keith has a BA from New York University. So that's a really long bio, Keith. We're just gonna start right off the bat. But yeah, we're impressed to have you on our trading lounge first time. Maybe you can start off by telling us really what sparked your interest in the trading industry.
Well, actually, it was the my interest in international politics and the intersection of finance. That was always my passion. So I also was trained by my uncle in the market starting at 5 years old. So he was sort of a Renaissance man, and he invested and traded in the markets, and also loved poetry and literature. So my nighttime and bedtime stories were often a combination of what's happening in the markets and reading me Shakespeare or uh, reciting an Edgar Allan Poe poem. So I
Mm-hmm.
had tremendous exposure to the markets. And while I was in junior high school, I used to cut high school and go down to Wall Street and watch my uncle operate in the markets.
All right.
So
So from
I
a
had a
young
lot of
age,
exposure to that.
that's really interesting. And so did you grow up in New York? Um,
New York and New Jersey, and I went to New York University um, when I was fairly young. Actually, I never graduated high school, but I did graduate college. And while I was going to college, I used to go down to Wall Street quite a bit
all
because
right.
NYU was not far from downtown New York.
All right. I had some questions coming in from the trading community, so I'm just gonna send them out, and then you can maybe help us understand more because you're an automated trading expert. So the first question was, could you walk us through a recent automated trade from start to finish? To be able to see, I think this is where maybe it will come in later when you're sharing your most recent trade setups. So, from a complete beginner who's just heard about automated trading, what is the most important step they should take to get started? So that's like the first question.
Well, that's a great question. And to me, understanding your risk controls is the most important thing. So, the first thing I learned when I went down to the trading floor, and when I was on the trading floor, it was during the commodity super cycle in the mid to late 70s. So, there were markets that were moving so fast. And if you didn't understand your risk first, um, you would end up broke. And that has stayed with me for my whole career. And to me, the first thing is if you need a system to say, if I'm buying it here, where am I wrong and where am I getting out? To me, that is the beginning and the core concept that's crucial. You need to understand your entry price and what your exit is if you're wrong. And then from there, it becomes pretty straightforward in terms of uh, managing the trade. Because if you know what your risk is, you want some sort of understanding the multiple of what your target is, and then how to let the profits run. Once, what I like to do is take off a portion of the trade
Mm-hmm.
at higher than what the initial risk is, maybe 2x. So if I'm risking $1 and now I have no risk on the trade, if it comes back to the original price, and then I could let and play with the balance. If you start off with that concept, you're in really good shape. You've got risk controls, and once you understand what that initial risk is, you also can then manage the upside as well. So that is the most crucial thing to have in your pocket of understanding, and that's crucial. Risk control is everything. So when you buy it, when are you wrong? And then from there, you can manage everything else.
All right. So, and you talked about risk control. So what are the risk management tools that you employ to mitigate risk when it comes to your own personal trading?
Well, I use a couple of different things. I try to look at, the overall percentage, how much, what percentage in terms of the overall price. If I see a level that, is where I would be wrong. Um, I also look at something called average true range,
Mhm.
which is the volatility, right? You want your risk to be based on the natural volatility of the instrument you're looking at. So that's part of it. And those are the two key things. And then I know how much money I'm running and what percentage is appropriate for each trade. So that really depends on your overall approach. So you need to understand how many trades you could have on at one time, what your total risk is across all of them, and then allocate to each individual trade an appropriate and equal amount.
Yeah. And when it comes to automated trading, most people they were asking, do you have to be a coding expert to be able to become an automated trader? And what types of software or tools could you recommend for beginners to learn how to do automated trading?
Well, to me, I think if you're a beginning trader,
Mm-hmm.
the best thing to do is to use algorithmic driven models that other people have developed, and then learn from that. If you're just a beginner, you need to understand the core principles of different trading strategies. And there are a lot of things out there in the publishing world that have automated trading strategies, and you will learn a lot from that.
All
That's
right.
one of the things that we do. So we have the automation. You end up understanding the price entry, how many different stocks, when to do the rotation, and what the risk controls are. And if you have a model like that, that's a lot to learn from. And then you can, if you're really interested and you want to get into programming the models yourself, that's something that you could do. And it's also interesting right now, you don't have to be an expert programmer because of AI. So if you know the questions to ask, and you could literally, using AI, create an automated trading model. But the first thing you need to know is what are the questions you're going to ask an AI engine to create the model from. So my suggestion is to research and look at what's available. Obviously, that's something that we do. I also use some of those models um, in our asset management company as well. So they're highly sophisticated. We we're using, advanced algorithms, including some AI to improve the models and stay on the curve. One thing that's clear also to me is how the world has shifted over time. The speed in which markets are changing is also increasing, much like uh, what's going on with the speed of processing. There used to be Moore's law, which said, every 18 to 24 months, uh, computer chips would double in speed. And now it's a month to 3 months, and AI has even revolutionized that. And that has an impact on the markets as well. And so you have to stay on top of things. And that's why it's more than a full-time job to do that.
Mm-hmm.
So if you're a beginning trader and you don't have the expertise, looking at outside professionals who do this is, I think, a smart thing to do. The toughest thing right now is there's so much out there because there's no real cost to putting out information on social media that makes extraordinary claims. So you have to be prudent about the research you're doing and the claims that people are making. That is definitely a factor.
All right. And could you talk a little bit about the human element, the shift in mindset when it comes to trading psychology? When someone is now moving from manual trading to trusting an automated system?
Well, repeat the question. I'm not sure
Yeah,
I understood exactly. So just
yeah.
uh,
The human element of trading, what's the biggest shift in mindset when it comes to trading psychology when someone is moving from manual trading to trusting an automated system?
well, I think it's the intersection because one of the uh, things that's important to understand is with AI, it can come up with telling you to buy or sell or do something. And you would not really understand why if you didn't ask the specific questions and have some understanding about the market and what the patterns are. So the thing that is the toughest is all of these models, and especially the more advanced claims, is you may not even know why it's making these decisions or what the inputs are. For me, that's entirely um, one of the core elements for me to trust anything is to understand what were the questions asked, what were the base elements of the algorithm, and is there some logic to how and why it works? So the relationships in the patterns, intermarket relationships, all of these things are crucial in understanding, having a core understanding of what the algorithms are trying to accomplish. So having some understanding of that is really important. And for us, since we have tremendous experience, understanding prior patterns, how they might have shifted, is part of the process. So once you get some experience, if you find an algorithm or a trading system that you like on the internet as a beginner, this would be really helpful for you to understand what the edges in the market they're trying to exploit and how it all intersects together.
Right,
Does that make
right.
sense?
Yeah, it does. And when it comes to, before you share your screen and take us through maybe your most recent trade setups, you went ahead to found marketgauge.com. So, why should traders be equipped with financial information?
Correct.
And how does Market Gauge solve the problem for both institutional and retail traders?
Well, the process that I just described is exactly what we do. So marketgauge.com is really for the self-directed trader, right? And with that, we have market commentary, we have charts and our proprietary algorithms to analyze the markets. And we also have some trading models that use the edges and the trading indicators that we've developed and the algorithms. But then it's up to you to execute and follow those trades. Or, so for instance, in terms of the indicators, you would use that as part of a system that you develop using those indicators as inputs. On the other hand, we have trading models that does it for you. It says buy here, sell here, get out here. Then it uses our indicators and algorithms in the trading models. And then we have overall market commentary and analysis that we do as well. Then on the asset management side, we do everything for you. So we have different trading models that handle different asset classes or individual stocks. And we put together blends of the models for a whole portfolio and would manage it for you. But that's a separate company doing asset management.
All right, all right. Okay, so maybe you can share your screen and take us through your automated trade setups for your most recent trades.
Okay. So,
and then maybe also as you do that, you can tell us, because you've been trading from the floor since the trading days were on the floor of the exchange. And then you went on to go to hedge fund, and now you're doing retail trading. And I'm assuming you won't retire anytime soon. So how have you remained to be consistent throughout those different stages of your trading journey?
Well, it's a passion. So even though I'm a little bit older than when I started in the mid to late 70s, as long as I stay healthy and I don't think I'm going anywhere. When I told you about my uncle who was involved in the markets, he worked till about 90 years old. So I love what I'm doing. To me, it keeps me engaged in what I always liked, understanding how the world operates, and that's the intersection of politics and finance, right? Politics driven by money, and the markets tell you a lot about what's happening. So I'm sticking to the game. So with that, let me share my screen.
Maybe zoom in a little bit.
Okay. Can you see it?
Yeah, maybe zoom in.
Hold on. Let me what I'm going to do is change the screen that I'm sharing. Does that help?
Yeah, that's better.
Okay, so now, how is that? Is that okay?
Yeah, that's fine.
Okay, so what I wanted to show you is what we call Big View. This is marketgauge.com, our website, okay?
Mm-hmm.
And on the website, we have something called Big View, which is updated every day. On a weekly basis, we do market commentary, an overall analysis of what we see happening across all the markets around the world, with a focus on the US because it is the biggest US, equity market in the world. So we've got charts, our proprietary indicators as well. So that is a really good synopsis. So one of the things, let's see here. Hold on. Okay, so for instance, just to give you an overview of how we look at things, we have a price chart on the S&P 500, which is one of the core benchmarks. And you can see this is a daily chart. On the underneath, we have our proprietary real motion indicator. So there's something called price and price momentum. And what we look at is the difference between what the actual price is and what the momentum is doing and how that compares. So you can see there's this green line here is a very simple 200-day moving average. This is a 50-day moving average. This is a short-term 10-day. The way the moving averages are stacked relative to price tells us what market phase we're in. And then I compare that to the momentum indicator here. So we have two ways to measure momentum on a daily basis. We look at it with both the 50-day and the 200-day of momentum. And one of the things you can see is right now momentum is in a bull phase because the 50 is over the 200-day. And you can see we have green. So all of the dots here on momentum are positive, consistent with the overall picture that we're seeing with the price movement. We like to see momentum exceeding or at least matching. So one of the key things that is interesting here is that there is a momentum divergence because we made a new high, right, in mid-August. And then in late August, right, you can see we made another high here, yes, another high, or maybe this is early September. And if you notice, the momentum has not been able to take out the mid-August high, and we're sitting right on that 50-day moving average of momentum. If we get any weaker here, that could tell you that the momentum of this immense, strong rally is running out of steam on a intermediate term basis. Now, on a shorter term basis, momentum definitely has peaked, and you can see this is momentum based on a 10 and a 50-day moving average, and that is starting to run out of steam. So if we get a sell-off, right, beneath this price level of 50-day, if I was in the market, which we are, I would want, and I was doing some risk management, I would get out of the market somewhere around that 630 level and lock in profits. That's one way that we look at the markets.
All right.
Now, one thing I do want to go into, which is very interesting, is if you look at the global markets, I want to take a look at gold. So, and this particular gold chart here, we have another proprietary indicator that we use, and that's called our triple play leadership. And one thing that this measures, you can measure one instrument versus another. So in this case, we're looking at gold versus the S&P 500. So we're looking at alternative asset, hard asset versus stocks. And this is also a very good indicator about the overall situation in the economy. So look what's happened here. We've had an explosive move above this resistance. Now, one of the things that we did a couple of about a week or so ago, we bought gold right around here. You can see momentum started to pick up. There was a trend line that clearly broke, and we bought it around the 312 level. It was now up to 325. We also had a very tight risk, right? You can see this is, considering this huge move up and this compression range, we bought it able to get down. You can see on a shorter term basis really is looking at the relationship between gold and the S&P, and you can see here gold started to lead, at least on a short term basis, around the same time. So everything converged. So I looked at pure price, momentum, and relative strength versus a key benchmark. Those are some high level principles to combine to do your analysis.
All right. I think we've gotten your trading rationale process from the two charts. Maybe then, as we conclude, you can tell people the benefit of subscribing to your information sites, and then also any book on automated trading that you would recommend.
Well, what I would recommend is Mish's book. It's not so much on automation, but the higher level concepts, including the modern family, intermarket relationships, and it goes into market phases. So for a beginning trader, it's really, it's got all the basics in there. In terms of, something more technical, I would think maybe the logical trader would be another book, not written by us, but it's got a lot of technical insights taken from the floor. So I like that. As floor traders doing a systematic process, one of the things that we like to use is the opening range. And the logical trader talks a lot about the importance of the opening range. So again, depending on what your objective is, obviously having an outside money manager is one objective where you say, listen, I know being involved in the markets is important for my financial future, and I want to delegate it that's a different thing than taking the time to learn and trade yourself. So I'm not sure which one, Sylvia, you would like me to focus on.
So I think guys, how can guys get in touch with Market Gauge in case they want asset managers and fund management?
Well, you can contact me directly or send me. The best way to do it is to send an email
Mm-hmm.
to me at the asset management company.
Mm-hmm.
So that's Keith at Keith at mgamllc.com.
All right. Thank you so much for your time. I think we'd love to host you again in the future where we'll delve more into the charts. But for today, that was a good introduction, and we're gonna share this
Well,
recording with you once it's
thank
on
you.
our YouTube channel. Yeah.
Right. I mean, if you want, the educational stuff, that best way to do it would be Keith at marketgauge.com.
All right. I'm gonna link that on the show notes. Keep at marketgauge.com. All right.
Correct.
All right. Thank you so much, Keith. We're gonna let you go and have your breakfast. It must be very early for you.
No, it's not bad. It's 11:30.
Ah, okay, okay, okay. All
So
right.
it was fine.
All right. Say hi to Mish for us, and we'll
Uh,
see you next time.
Excellent. I look forward to it. Very nice. Thank you for having me on the show.
All right. Cheers. Bye.
Cheers.